What the Elites Don't Want You to Know by Robert Kiyosaki. The author of the best-selling book Rich Dad, Poor Dad has something to tell us that the elites of world domination don't want us to know, especially in regards to the corona crisis. Join us as we explain the main takeaways of Kiyosaki's The Rich Dad radio show as he interviews Jeff Wang, a prominent expert on cryptocurrencies, to explain how we can make the best of the current situation and avoid falling into the trap that the Fed has been slowly digging right under our feet. But before we do, please support our channel by hitting like and subscribing to our channel for more great videos like this one. So what exactly is the main message behind Robert Kiyosaki's analysis? It's simple, and it's one he's been advocating for quite some time now. The Fed, the Treasury, and the government in general aren't our friends. They're out to screw us on behalf of the most powerful people in the world, and they'll do anything to pick our pockets with us not only condoning it, but actually even thanking them for the effort. But why does he think that, and how exactly are we being played? Most importantly, what can we do about it? Well, turn up the volume on your headset and sit tight because you're about to find out the truth. To Kiyosaki, the Fed is not to be trusted. For Kiyosaki, both the Fed and the US Treasury, which should be independent institutions, are really made up of the same gang of criminals and have the same intentions, to take from the poor and give more to the rich. He states that the whole coronavirus crisis came in way too good a timing to be a coincidence, serving as the perfect cover-up for the collapse of the shadow banking system in September 2019, which, along with the crash of the entire stock market, is something he had been anticipating since 2016. What is the Fed doing that we should be worried about? According to the American Businessman, the crash of the shadow banking system is the real reason why the Fed is printing out tens of trillions of dollars to begin with. And the coronavirus just gave them the perfect excuse to shut down the world economy and say that the extra dollars were just a form of economic relief for businesses around the world, especially in the US. These actions, supposedly designed to cope with the economic consequences of the pandemic, will lead to, using his own words, one of the biggest catastrophic cash highs in history, which is something that will destroy the value of the dollar, anyone's savings, and a whole lot more. If we still think that investing in mutual funds will ensure an easy living upon retirement, we're literally screwed. So we need to take action now before it's too late and act outside the system. But how do we do that? How can we take our hard-earned money out of the influence of the Fed's actions to protect it from devaluation? That's where his guest for the show comes in. Enter Jeff Wang. Kiyosaki's guest for the show is Jeff Wang, an experienced technologist and crypto investor that has worked on many different high-profile tech companies and who currently invests in cryptocurrency technology with a group of investors called Rocket Fuel Team. Wang explains that a cryptocurrency is a digital currency in which all parties have access and control over the same distributed ledger or record of transactions, so that everyone agrees on how much money everyone else has and is being transferred around. So Bitcoin is basically just a record of the history of all the transactions made by different keys, which are 64-digit codes unique to each user. The main features that make Bitcoin and other altcoins work outside the system are: no one controls it because it's distributed across thousands of servers, it can't be governed and there's no policy around Bitcoin, no one can ban it, it works internationally across borders regardless of the local currency, it can be traded for all other assets. Cryptos provide a payment system that is outside the influence and control of any and all governments, which is why they're a great way to fight back, since it doesn't depend on the Fed, the Treasury, or Wall Street. How can we protect ourselves or even profit from the Fed's schemes? The key here, as both Kiyosaki and Wang point out, is taking our money outside of the normal currency system and putting it in Bitcoin or another crypto. The logic behind that is that historically the price of Bitcoin has been inversely correlated to the dollar's value with respect to other currencies. What this means is that whenever the dollar crashes, the price of Bitcoin soars. The massive multi-trillion-dollar printout by the Fed will most likely cause the dollar to crash, causing massive inflation, possibly hyperinflation, and, with all probability, the price of Bitcoin will go up in the long run. So now is the best time to go into Bitcoin or other cryptos as a form of hedge to protect your savings from devaluation and even profit from it. A word of caution and opportunity: volatility and halving. Bitcoin is considered a risky asset because it can be very volatile. Additionally, there's also the issue of halving, which is a part of the Bitcoin algorithm that cuts its inflation in half, making it harder for miners to break even, which ends up hurting the price. While volatility is unpredictable by definition, halving is a predictable process and is set to occur every time 210,000 blocks have been mined. This happened on May 11, 2020, and the price dropped from about $10,000 to around $8,500. These momentary drops are great points of entry into Bitcoin, and we should be on the lookout for them. Regarding the use of Bitcoins, the suggestion to buy them is not for what you think, and Jeff explains why. To Jeff, Bitcoin itself is not a currency for everyday use. This is another one of the key takeaways from the interview, since most of us consider Bitcoin as a cryptocurrency which we can use to buy or sell goods and services. However, Wang sees two big problems for using Bitcoin as a currency. First, it's too volatile, so it would really suck if you spent some Bitcoins on coffee and then saw the price of Bitcoin shoot up. Secondly, transactions take too long with Bitcoin. A transaction can take several minutes to process in the BTC network, which makes it impractical for everyday use. However, it can be a valuable asset to protect our savings. Bitcoin is better than gold or silver. Bitcoin is used by governments around the world to protect their savings from local currency fluctuations because Bitcoin holds its value against the dollar and even increases it. This is pretty much the same as buying gold or silver, but unlike those which are rather hard to trade once you actually need the money, we can trade Bitcoin almost instantly, 24/7 whenever we need to. Therefore, it's a much more liquid way to keep your savings, almost as good as cash, since you can turn it into dollars or other currencies almost instantly. Now let's take a look at what these two have to say about other cryptos. Ethereum and smart contracts. The most important alternative coin is Ethereum, and according to the tech-savvy investor, this coin took the blockchain technology behind Bitcoin and created smart contracts, which are simple, auditable pieces of code that automate money transactions between a service provider and a contractor, completely bypassing all banking systems. This makes Ethereum a good alternative to other currencies and even to Bitcoin to pay and receive payments for services. After talking about Bitcoin and moving on to Ethereum, the American author asks a very valid question. Why buy Bitcoin or Ethereum if anyone can create their own coin? This question is a way to ask another important underlying doubt many of us have regarding cryptocurrencies. Where does the value come from? To answer that, Jeff decides to take a case-by-case approach, centering on Facebook's Libra and China's DCEP. Facebook's Libra. We all know Facebook and have heard about their project for a cryptocurrency called Libra. The main source of value that Libra offers is the possibility to use an already existing connectivity framework. In other words, Facebook to do business both inside and outside countries that have very bad banking infrastructures or very weak local currencies subject to inflation, like many in Africa and South America. In other words, it allows anyone to start a business with nothing but a laptop or smartphone and a Facebook account, allowing easy international transactions with high speeds and low fees, completely independently of the local currency or government, which is something many local governments are not keen on, since it bypasses their business and banking system altogether, competing with their central banks. Speaking of which, central bank digital currencies and China's DCEP. The World Economic Forum is advocating for the creation of digital currencies by central banks, and they published a whole framework to teach different governments how to go about it successfully. China is the current leader, and they're already rolling out their digital yuan called the DCEP. This is a different model to coins like Libra, in the sense that it is centralized and completely controlled by the Chinese central bank, while all the big tech companies and banks in China provide the infrastructure to ensure its adoption. ICOs, making money with cryptocurrencies. According to Wang, the entire system of investment in cryptocurrencies is purely speculative. The way it works is that investors lend money to startups, and in return they receive tokens. Those tokens will have value once the project goes live, so all investments are done purely on the seed rounds, and they depend on the project reaching certain technological milestones, like successful beta tests, entering coin exchanges, etc. So you go in on the seed round and then exit once the project actually takes off by selling the tokens. This is called the initial coin offering, or ICO, a similar concept to stocks IPO. The whole point of What the Elites Don't Want You to Know is to show us how the Fed and the Treasury are not doing us any favors, and how taking what little money we may still have saved up and putting it in Bitcoin or another crypto can be a good insurance policy in case things go south, which they are quite likely to do. Do you think that the whole coronavirus crisis is just a scam made up by the rich and powerful to cover up a deep financial crisis that is coming, while the rich gets richer by better positioning themselves under the radar? Leave a comment and join the discussion down below. And don't forget to subscribe and give us a like. If you want to know more about the technology behind Bitcoin or China's digital currency, check out these videos that are popping up on your screen right now. Thanks for watching.